Well, I mean, I escaped to Miami, so I didn't see much of the WEF craziness. Timing the market is generally not a good idea. So we will be talking more about what election years mean. There are some slight differences that we see, especially when we look at the US election cycle.
I mean, we see it with every government that once you start to, for example, subsidize some specific group, they're not going to give it up.
Welcome to the Swiss Money Secrets podcast, a podcast designed to cover all things offshore investing and banking from the Swiss perspective. Let's get into it.
Welcome into the new year, our listeners. It's the end of the month, but we are happy to be bringing this topic out to you today of what it's like investing in an election year. Before we jump into that topic, we're going to talk about the WEF that has taken place in Switzerland and what has transpired there, some strong words, signals, to give a picture to the listener of how the Swiss have seen it. I mean, it happens every year here. So Jamie and Urs, maybe you can shed some light. I thought what was interesting at the WEF was what the president, Miss Amherd of Switzerland, said there. Maybe you guys could shed some light on what took place this year.
Well, I mean, I escaped to Miami, so I didn't see much of the WEF craziness, even though my LinkedIn feed was full of people who attended. I think that's probably the first or most interesting misconception that some Americans might have overseas, is that it's this very elitist, secret event that's happening. But I know people from interns to startup founders to just small family businesses who have attended. There's really a lot going on. That's also side events and workshops that's not necessarily happening on the main stage. So I know a lot of people who have been there. Personally, I've never made it over there. But yeah, it's a big thing here in Switzerland. There's a lot of press. Our army is very busy trying to protect everyone. But yeah, I think it's always an interesting time of the year. There's a lot of talks happening, a lot of politicians, C-level executives, and even our president discussing various important issues.
Yeah, and I think what Jamie just mentioned, the misconception, the topic which was chosen by the WEF was also interesting, which was regaining trust. And so you mentioned what Mrs. Viola Amherd had her speech about trust, about how to regain it or reclaim it from the people, because that's actually an issue, and there is a lot of trust which was lost during the last couple of years, especially during the pandemic. And so she was mainly criticizing that there is a lot of talk about how to regain trust, how to be able to have a setup or an environment where faith is generated, but that it oftentimes ends with speaking about it, and that there are not enough actions following this kind of discussions.
Yeah, go ahead, Jamie.
Okay. I also read an interesting quote about the WEF, which I like, which said that it's the event where billionaires explain to millionaires how the middle class feels. And I think that's a very nice summary. The event is a little bit detached from reality, even though a lot of business people are there, or even from smaller companies and startups. It's a lot of hypocrisy also. Everyone flies in with a private jet, and then they talk about what the middle class can do to save the environment and the planet. And while I'm generally not against the event, I think it's important to take it with a grain of salt. I mean, there is a little bit of irony, as Urs said, in the title and the theme that they chose. And it would be nice if over the next few years they actually manage to regain a little bit more trust from the general public and not just talk about it.
Yeah, I think that was, when I was reading the news article about Ms. Viola Amherd's statements, I thought, wow, that's finally, maybe something a little bit more bold or challenging, even though, last year there had been talk from companies, saying, if you actually follow this, you get in more trouble than if you don't follow these directives that we're putting out. And I think she was talking more on the social governance side or the ESG side, and it's always interesting to see what comes out of Davos, and it's always a big news thing. And for various aspects of viewers, they have different feelings on it. But I think that's your summation was very correct in how to view it from a more of a observational point to create thoughts out of it and how to move forward, and as a normal person to go about it. Cool. So I think there we can transition into our topic today, which is invested during an election year. And all of our listeners know that there's an election year in the US, but what they might not know is that there's actually elections in over 60 countries. The EU is having elections this year. Some of those elections have already taken place, and that's quite interesting to see when you look at, I think I was reading a statistic that 49% of the world's population will be under an election this year. They'll be going to the ballot box. And so that's an interesting time of how does that affect the market. So Jamie, as a team, maybe open it up on what we kind of see in an election year, is there past statistics that show us something? Is there a way we can move forward in investing? Are there any strategies that make more sense?
Those are a lot of questions.
Yeah, of course, yeah.
I think I want to start with one point before we tackle everything else that you just asked, which is timing the market is generally not a good idea. So we will be talking more about what election years mean. There are some slight differences that we see, especially when we look at the US election cycle, that can be interesting to observe, to have conversations about. But at the end of the day, being invested is better than not being invested, and being invested throughout all trading days is better than trying to pick the right one. And the person who came up with this whole idea of having a US election cycle, that every year of a US election, so year 1, 2, 3, 4, we see different behaviors in the market. He's a person who believes in timing the market. He's also the person who came up with the Santa Claus rally, which some of our investors might be familiar with. His name is Yale Hirsch, and he has a different standpoint than us, I would say, in terms of believing that you can time the market. Having said that, there are some differences that we see, and generally speaking, the first year of the presidency is toughest on stock markets because the president usually is most open to putting tough measures right after he was elected, because the next re-election is still quite far away. So what we see is year 1 and 2 are fairly tough on markets, and then year 3 is generally a very good year, and year 4 is also still a good year, but a little bit more volatility can be seen there. And I think in year 3 is really when people start thinking about the next election, when people start having stronger opinions on whether they want to re-elect the person who's in office or not. So they're having a very ease policy in terms of having a policy in place that is going to be favorable to stock markets, makes sense from a president's perspective that wants to be re-elected. And then the volatility in year 4, I think that just comes from investors not liking uncertainty. And an election always comes with uncertainty, right? If you have a proper democratic election, you don't know what the outcome's going to be, and that's something that investors dislike.
Yeah, I think that's certainly a point, is insecurity, no matter what it is, the markets seem to have a bit of volatility inside of that. So as you mentioned, no time in the market. I think we all sit here and agree with that totally. Or do you have any ideas, I guess, when it comes to people who might be nervous or whatever, how to move forward through market insecurities?
Yeah, sure. I mean, the election or the political side is one side of the medal, but there is also another side, which is the economic side. And I think it is very important to not lose your perspective and not lose the focus on what is going on economically in the world and in the country where the elections take place, because oftentimes, I mean, you can also not you cannot drive or steer the economy as exactly as you would like to. And so I think that it is important to look at the investments you would like to take into your portfolio, and no matter what is going on politically, even so it could have an uptick or down or going down for some time, that you look, okay, is this investment considering the overall economy, is it worth buying it? and is it worth it the long term?
I think that's a very important point to bring in, the long-term nature of investing. So for us, we have an extremely long time horizon for most of our clients, and this is something that, yes, it can be affected in the short term by political cycles and elections in the US or other markets, but it's important, I think, to have discipline and keep the time horizon in mind that you have planned for your portfolio and not get too sidetracked on what's happening in the short term.
Yeah.
Yeah, go ahead.
And I mean, even so, I agree that timing the market over the long term not works very well. I think there are some environments or some situations where it might be beneficial to hold back for a certain time period, but again, it comes to like the evaluation and the priciness of the investments themselves.
Yeah, it's not talking about timing the market, but understanding paying a fair price
Correct.
for the investment that you're looking at.
Yeah.
And I think that can get confused sometimes,
Yeah.
especially when talking from a professional investment standpoint to a private investor who even has good knowledge. If they hear an investment advisor say, yeah, we're going to wait right now, it's not really the right time, but then they think, oh, they're trying to time the market. But actually, how we could communicate that better is, hey, the price isn't really at a fair price or what we think it should be valued at right now. And so we're going to keep it on our radar, continue to monitor it, and maybe even adjust our evaluation. If the company has seemed to hold that price, well, maybe there's something that actually means that we need to readjust our value. And so it doesn't mean timing and the timing of it, but actually looking at the right price for something.
Yeah, correct.
And I mean, we are never not invested at all, right?
Yeah.
I mean, it's always an ongoing process where we have certain investments, we're looking at adding more. And I think when we talk about timing the markets, it's also like, I have this $100 and I'm going to wait for the perfect time to go into X investment. Whereas with us, it's like, okay, we have a little bit of allocation in currencies, a little bit in bonds, maybe a few stocks. And now, is this stock at a fair price right now to add it to the portfolio, or should we maybe look at another stock? But I think when it comes to the time horizon and the whole presidential election, another thing that's interesting to note from one, like an outsider perspective as a Swiss person looking into US politics, but also from a statistical point of view, is that Americans in statistics tend to severely overestimate the power of the president and also severely overestimate the party allocation. So whether like they overestimate how good the representative of their own party is going to do and how bad the representative of the other party is going to do. And I think that's something, when we look back, especially at like fiscal decisions, when it comes to government spending and when it comes to devaluation of the US dollar, this is something that we have seen over various previous politics from both sides of the aisle. And this is something where personally, I don't think we will see a change irrespective of who's going to win this year. And this is something that people need to take into consideration, maybe focusing less on like which specific person is going to be in office and what specifically that means for stock markets, but rather think more about what is the generic direction that the US government is going to take, and is one single person really able to change that? Are the incentives there? To reduce government debt? Are the incentives there to try to give more value to the US dollar again? And there personally, and you're happy to join in if you disagree, I don't think that's going to change, irrespective of who wins. And that's something that people need to keep in mind when constructing a portfolio. And that's, I know we might sound like broken records, but this is something that we very much consider when constructing our portfolios, that we see this long-term devaluation of the US dollar and that we want to diversify out of that and build something that is built on currencies and economies that have more of like a value appreciation potential.
And a sustainable approach to running their economy and holding the value of their currency. I think that's the other side of it. We have recently, Urs and I have started a little mini podcast that is put out every Friday, where we look at the market data of the week that we just had and what data points we're looking at moving forward. And last week, what was interesting was we were looking at some of the job market reports of 2023 in the US, and it was that job markets increased. There was more employed people than unemployed people that created jobs, and that looks like a great macroeconomic sign for the country. As we dove deeper into those numbers, it showed that over 50% of the jobs created were either government sector jobs or highly subsidized government sector jobs. So again, that whole picture of what you were talking about, Urs, is look at the data points, what the economy is doing and how that economy is being driven, in what direction. And Jamie, to your point, I agree. I don't see either side really doing much different. I mean, in 2023, we saw the U.S. get downgraded by multiple credit rating agencies, and that's a huge deal.
Yeah.
I don't think that that's something so small.
No, I think these are like structural trends, and it's not easy to break them. I mean, we see it with every government that once you start to, for example, subsidize some specific group, they're not going to give it up like for
No.
just for free, and
No.
so it is really hard to cut back on like promises you made in the past, and I think that is something which will be very interesting to see where it goes. But it definitely has like started the trend many years ago already that the US dollar is devaluing, as Jamie said.
Yeah, and we only see slight. I guess when we see the value bumping up of the US dollar, which we see at time to time,
Yeah.
it's usually very short-lived. And short-lived in the sense of a couple of months, maybe a year, sometimes it lasts a little bit longer, but not often. It seems to be, since I've joined the company, quite volatile as far as its trend, but still always in that downward direction.
Yeah, I think the last couple of years have been very volatile in general. I mean, all over the place, all over the world. It has been so insecure as it hasn't been for a long time. I think like from after the great financial crisis towards the start of the pandemic, like the coronavirus and all the lockdowns, I mean, that was just like a very favorable time period. And I'm not expecting that to take place again.
Yeah, and so I think that kind of comes back to where we can kind of talk about the strategy, which we said is hold true. Look for the valuation of the companies, look at the value of the individual company, what's the environment, what's the economy look like if you're outside of the US, how has that company performed in volatile times, and what's their valuation? Are they overvalued, are they undervalued? Jamie, do you have something to say?
Yes.
Yeah.
Also check the currency that the company is being held at, right? So this is something that we say time and time again. If you have a good investment in a US-based company, the company might be doing well and you might be making money, but it might be much less than what you actually see on paper because the US dollar is being devalued. So that's just something to keep in mind is when you diversify, we always say obviously different companies, different sectors, but also different currencies and geographical regions.
Yeah, I mean, we're still in a time period where the US is still quite above their target inflation number. And not all places are that way, but there's different economies dealing with different problems around the world, and you can look to find more stable jurisdictions. So with that, do we have any final thoughts that we want to pass on to our listeners?
Well, my one final thought might be that, it's just an interesting tidbit. Switzerland is not one of the 65 countries that holds election this year. So we already had our election in the past fall. We're a little bit ahead of the curve. So our government, parliament, this is all set. We have a new president, Viola Amherd, as we have mentioned her a few times already on the podcast. So we hope a little bit less volatility for us this year.
Yeah, and from my side, even so it's fun to follow all the political back and forth and the volatility that comes out of it, I would rather use it to add good investments if they start to drop because of this insecurity, instead of start panicking and selling or whatever other moves you could do. Just focus on the long-term strategy, stay with your strategy you have chosen, because in the long term it has proven that if you're holding a strategy, you will be much better off than if you would change probably in the worst moment.
Thanks again for joining us on this episode of the Swiss Money Secrets podcast. If you would like to learn more about WHVP and what we do, check us out on our website at whvp.ch. Or you can check us out on any of our social media handles on LinkedIn, Facebook, YouTube, or Instagram by simply searching WHVP. Have a great rest of your day.